Okay, good morning, members. This week is going to be kind of short and sweet. I don't want to try to overanalyze what's happening. I think it's pretty straightforward. Last week, pullback, small pullback. Russell was the one that was hit the hardest. That was on oil primarily. But overall, a small pullback, still down on the year, 5% on the two worst indexes, about flat on the others. If we move on to what's happening here, technical summary. Last week it was pretty simple. We just came too far too fast, right? And if you look at any of these indexes, if I pull over the S&P 500, for example, I've got it on a weekly. I mean, when you get a vertical move that is like this, it's not going to be able to just continue, right? I mean, we saw it before. We saw it back here, right? You're not going to be able to just continue week after week straight up. You're going to need a rest. You've got to get some sort of a pause, and then you can either go higher or, of course, you fall. But you can't just keep going up over and over on a vertical move. A regression to the mean almost always happens. And so we've simply come too far too fast, and now we've printed reversals on these weekly time frames. And let me spend just a few minutes on what that means, right? It's a two-bar reversal, right? To get a two-bar reversal, you have to go over and under on a bullish one, right? Where you're trying to turn and go bearish, or actually pull back, I should say. You have to go over, you have to go back under, you have to close under, you have to have less volume, and even though we had a shortened week, if you add this up, you still would have had less volume even if we had traded 5 days instead of 4. And then finally, you have to have an extended move, and the easiest way to see that is to see the angle of ascent with a line, right? You just take the bottom, go to the top, and say, okay, what does that angle look like? If it's like this, it's not sustainable, right? And that's a compressed move in compressed time, fast, higher move in compressed time, right? If you take an ordinary, sustainable move, which is about 45 degrees, you can see the huge difference between these. So you have it on the S&P 500. You have it, matter of fact, on all the indexes. And you also have it on a lot of the major sectors. The exact same thing. You go to any of these charts, you'll see the exact same print on the weeklies. But you don't see it on all of them. And it's kind of key when you look at this, look at the ones that aren't. Those are the ones that led us on the way up, right? XLB, XLE, XLP, and U, right? These are all the strong ones. And then the XLY also tends to, not tends, but this time it happens to be in the same bucket in terms of the reversal. It didn't print. So you have all these strong sectors. Those will be the sectors that the money tries to come back into after the retrace, would be my guess. These are the ones that are going to pull back now. They're the ones that are set to go sideways at best, down most likely. And so that brings us back actually to the ideal is what does it mean to have a two-bar reversal? And what it means is that when you go up like this, right, the next bar, right, the next bar that prints over here, it's going to be sideways at best, potentially down. You just don't know how much down, and you don't know if it's going to be sideways or down. But what it tells you is you have pretty much a free bar that you can actually take an opposite position of the trend that's been taking place. And so I expect this week you're going to see that sort of thing take place on these indexes and sectors. So we should get sideways at best, down worst case. Oil is going to continue to be a big factor along with the currencies. That's no different than it was last week. As a matter of fact, if we look at the advance and how much we should get a retrace off of it, the key factors into this is going to be the same thing it was last week. The currencies is almost the exact same story, and oil is going to be the wild card, right? Just like it was last week. Now, if you look at oil and look at what it did here, right? Oil popped over or didn't pop over, popped back in, I should say, back into this little zone here. So you kind of have a little support zone right there. You came right into it, got the rig count number that was lower than they expected. Maybe the rigs were actually going to go back up. and so that gave the reversal. Oil really hasn't traded any volume on the way down here, and so the key spot on oil is that same spot I just identified as it comes back. That's the key spot. If it gets back into it, it's going to try to breach the other part of it. And believe me, these are big moves in the oil market, so you could get a 10% correction here at any particular point in time, and we are getting close. We had a little doji top, came off, and volume picked up. I expect we're going to try to trade into the top of that bar. That's probably how far this thing will get. So if I take and outline it again, I think that's the key area here on the way back up, and I think oil in general is going to be the wild card for these markets. If we get that pullback, and I do think we're going to see it start this week, where's the ideal spots to get back in? Here's the data, so you have it, but I'll pull them up and show you where I'm looking on these. Let's pull up the Russell. We'll just start with the weakest one first. That swing point high, this high of the first bounce up, that looks to be the key area, so I would be looking in that area on the Russell. If I go back the other way and look at the NDX, it's going to be that area off this bar, right? That's the the Feb 01 bar, I believe. Yeah, top of that bar is 4301. Somewhere into that bar would be kind of the key area. And if I look at the IXIC, which is the NASDAQ, the same sort of area in here. This has been a little bit weaker. That's where I'd expect that one to go. And if we look at the strongest one, which has been the S&P 500, I believe that this one is going to try to come back into that 1993 area. If you remember, that was the retest regen area from before that we were looking at. So I would think this area right here, using the bottom of this bar, that's probably going to be the area that it tries to trade to. So 1993 area is where I'd look there. Not huge retraces. That'd be about 3.5–4% on the pullback, and that looks to be a reasonable number to expect with respect to a pullback. Strongest groups this week are the ones that don't show the two-bar reversals, which is the ones I highlighted up here. And so I'd be looking at those two, on the way back, or not those two, but this group on the way back as a place to potentially be trying to pick something up. Bottom line, expect that hard first sell down to get bought. When they get it down 3.5–4%, they're going to reverse it. They're going to reverse it fast, so you're going to have to be ready with whatever you want to buy and pull the trigger on it. Potential scenarios, last week played out pretty much like we thought. Best case, markets just go sideways. Worst case, they do that fast trip down and potentially even reverse on the way. In other words, we keep making it all the way down there to those areas that I just showed you and then bounce right back off of them. The more likely case is we kind of work our way back to it this week. I don't expect us to just shoot down there and shoot back up. So that's the most likely case in my opinion. Fundamentals, you got Fed speakers again every day this week. Last week they were leaning towards all their comments towards the Fed being more aggressive on rate hikes. That sent the dollar up. But as we saw, the dollar did a little reversal. Looks like it's going to try to come back down. Got a lot of news this week. Earnings season is only 3 weeks away now. We got a lot of data out here with the employment number at the end of the week as the highlight. 3 weeks away, they've talked this market down in terms of earnings, so all the expectations are very low, but then we've had a huge rally already, so one has to wonder when we get closer what that landscape's going to look like, but we'll deal with that as we get there. So that's my take. I don't have much more to add. As I said at the top of the show, I think it's pretty simple, cut and dry this week. Market's going to try to go sideways to down, most likely, and look for those targets and a reversal there. See you.